It was almost disrespectful how much money my hard money lender chose to charge me. Almost disrespectful how much he charged me. It ended up being 16% interest and 6 points. On top of that, the broker charged me 2. In total, that's 8 points and 16% interest for my first real estate loan. Don't know what those mean? Stay tuned. If you're new here, welcome to the Hoan Zone, where we help you multiply the assets you own. I release a new video every Monday and Wednesday to help you figure out how to invest in real estate. So make sure you subscribe so you get those new videos. Back in 2011, when I did my first deal, we were just coming out of the market and every other hard money lender went out of business. Can you believe that? All the lenders going out of business because the people who borrowed the money couldn't pay it back. This is why lenders charge so much. They have to be mindful of all of the people who won't pay back. And sometimes there are so many people who can't pay back that the lender actually goes under. So in 2011, the market was just turning, but there was a lot of uncertainty. 2008, 2009, 2010, it hurt a lot of people. They decided that, hey, we're going to lend money, but we're going to be charging you 16% interest and 6 points. If you want the money, this is what it costs. I had to make a decision. Hey, do I want to do this deal? Well, it was my first deal and I had no other choices. There weren't many other hard money lenders. If there were other hard money lenders, they probably weren't going to lend it to me because, again, I was a first timer. Luckily for me, the person who taught me how to invest in real estate was a broker as well. He also found me the loan, right? He taught me how to invest in real estate. He sold me the real estate deal. Then he found me the money. That was key for my growth and sustainability in this business. Without that support, I wouldn't have had the confidence to move forward. He found me this loan. He charged me 2 points. I paid the 6% or 6 points, and then I paid 16% on the loan every single month. Now, the interest is charged annually, but I had to pay every single month towards that loan. If anybody ever quotes you a percentage, it is an annual rate, not monthly rate. Today's video is all about how to navigate the cost of hard money loans. This is a topic that is really confusing to people, and a lot of times people get caught off guard because the fees that are associated with the loan sometimes aren't shared with the borrower until the very end, right at closing. Unlike a residential loan, commercial loans like hard money loans, they don't have to share all of this information with you up front. There is no rules to protect you as the borrower when you're a commercial borrower. Now, in the beginning of the video, I said that it was almost disrespectful how much they were charging me because today the rates are anywhere from 2 points, 8% interest up to 4 points and say 12 to 14, much cheaper than what I paid before. But again, 2011, completely different animal. Today, so many people are investing in real estate. Real estate prices have gone way up. Now, will that continue? I don't know. You don't know. We'll see. We'll come back to this video a couple years from now and we'll see how the market did. Right now, real estate's booming. A lot of lenders are in the business to lend you money. And with all of those lenders, a lot of competition. The competition is fierce between lenders, and how they get your business is through marketing. They might say that their rates are 2 points and 8.99% interest. And then somebody else is going to put on there that they are 3 points and 10% interest. One is a nice round number, 3 points, 10%. The other one's 8.99, making you think 8 when it's really closer to 9. And then they say 2 points. But what they fail to disclose on the flyer is that they also charge you an underwriting fee, an application fee, and legal fees. Whereas the other lender who's charging you 3 and 10 or 3 and 12, that might be it. They might have all of their fees baked into that. When you actually compare the two, you might be spending more money with this lender at 2 points and 8.99% compared to the other one, because once all of those legal fees and application fees and underwriting fees are all added together, it might be more. Now, what should those fees cost? What do those cost? What I've seen in the market, your legal fee might be $500. Your application fee might be $1,000. Your underwriting fee might be $800. I've seen all kinds of numbers like that. And let's say that your legal fee, underwriting fee, and application fee all add up to $2,500, and then you add 2 points on top of that on a $100,000 loan. That's $4,500. Over here, where they charge you 3 points and that's it, It's only $3,000. You see how quickly that the 2 points is way overpriced compared to the 3 points? But marketing, they'll get you. And as a borrower, it's up to you to know what these fees might be. And it's up to you to ask. They don't have to voluntarily give you that information. Now, maybe they should, but what they should do and what they actually do, two totally different things. Something else to watch out for, inspection fees. When a lender is giving you money for your rehab, they are doing it on a reimbursement basis, meaning you're going to have to do the work first and then they're going to come out, they're going to inspect that you actually did the work. And if you did do the work, then they're going to give you the money, but then they might charge you for coming out there. Some lenders charge it, some don't. Up to you to ask, up to you to know to ask. Another tricky one is that some lenders require a minimum interest to be paid. Most don't have a prepayment penalty because their loans are so short. They want their money back so that they can turn it again and charge the points and other fees again. Every time a new borrower borrows money, they hit them with the points and the fees. And that's how most lenders make their money. Where it's tricky is when you ask for a 12-month loan and then you want to pay them back. And let's say you pay them back in 6 months. Well, if you pay them back in 6 months, they're missing out on the other 6 months. The lender might want their money. In the contract, they might have in there that you owe them a minimum of 9 months if you want a 12-month loan. If you want a 12-month loan, they want a minimum of 9 months. If you want a 9-month loan, they want a minimum of 6 months of interest. If you want a 6-month loan, they want a minimum of 4 months of interest. That happens. You have to ask. It's up to you to ask. Your job as an investor, get in, get out as quick as possible, right? Get in there, buy it, rehab it, rent it out, or flip it, whatever you're doing, and then get out, pay back your lender, stop the clock. But even if you stop the clock early, let's say you stop the clock at 6 months, well, they're still going to charge you up to 9 months because that might be their minimum. Check that. Make sure you know what you're getting into because you may be surprised at the end. How do you feel about hard money? Do you use hard money in your business? Comment below. Let me know. Are you a fan of using hard money for your real estate deals, or do you feel like it's too expensive? Hard money, in my opinion, is a wonderful tool in the right situation when the deal can afford it. In my very first deal, I used hard money, and if it wasn't for hard money, I wouldn't be doing deals. I wouldn't have had the money to afford that first deal. Hard money let me into the game, and I continue to use hard money today. It allows me to scale. Now, you have to just be mindful. If your deal doesn't have enough room, it may not be able to afford hard money. So you may have to look for other things like private money or credit cards with no interest payments or whatever. You got to be mindful of all that kind of stuff. Hard money is a fantastic tool in the right situation. Your job just to know all the costs. In this video, I broke down a lot of the costs. Most hard money today is charging anywhere from 2 points and 9% to 3 points and 12%. That's what's going on today. It may change in the future. If the economy drops, watch all of those numbers skyrocket. If the economy keeps on going well, then money gets cheaper and cheaper and cheaper. That is the pendulum of hard money. It can get super confusing. And if you're interested in learning more, I'm going to be releasing a free course, my Hard Money Heroes course, and that's going to help guide you through hard money. You're going to know everything you need to know before ever calling a hard money lender so that you sound professional and you're going to increase the likelihood of ever getting the money. Guys, in my opinion, hard money is a fantastic tool when used the right way. Back in 2011, when they charged me that 16% interest, it was a lot of money, but it let me into the real estate business. Without that loan, I would have never gotten started. Hard money, again, fantastic tool if your deal can afford it. My deal just happened to have so much room because nobody was buying real estate at the time. So prices dropped because it was a commercial building. It was 6 units or more, and we used the income approach to value the building. The value was super high. My purchase price was super low. There was enough room in there to afford the hard money. I was able to use it, but it can be super confusing for all of you guys. If you're interested, I'm going to have a free tool for you guys to use. It's going to be a course. It's my hard money course called Hard Money Heroes. If you go to hoanzone.com/hardmoneyhero, right? hoanzone.com/hardmoneyhero. You can check out my newest course to help you navigate hard money. Go through this before you ever call a hard money lender. This way you sound professional and you're going to increase the likelihood of you ever getting that loan. Rates today for hard money, somewhere between 2 points and 12% interest, 3 points, 13% interest, all around there. If the market tanks, expect all of those rates to go up. Your points are going to go higher. You're going to be looking at 4 points as an average. You're going to be looking at from 12 points to 16 points as an average. Today, much lower. Lots of competition. The market's doing great. In the future, who knows? Let's come back to this video later. But today, you can find loans for 2 points, 3 points, 10%, 12%, all around there. Some lenders are going to have the fees that we were talking about. Some won't. Ask all those questions. Don't be afraid of using hard money. A lot of people are. It can be complicated, but use the tool when the situation is right, and then you get to scale your business a lot. And if you need a hard money loan, come to Hard Money Hoan. See you guys in the next video.